The markets are shifting under the surface, and the next move could catch many off guard. Welcome to Daily Market Waves by Investing Angles, where every candle speaks, every Elliott Wave whispers, and we chart the turn before the herd even blinks. Tonight's pulse check. Volatility, a last-minute change in stance. Could it be the spark? Dollar, still wrestling with its bottom. Bond yields, pushing lower, but the monthly closure could flip the script. Gold, carving lower, one careful cut at a time. Silver, the monthly path looks almost locked. Uranium, an optimistic monthly setup taking shape. Oil, falling right on cue. Could it be a harbinger for the broader market? ExxonMobil, Chevron, ConocoPhillips, their monthly prospects look increasingly gloomy. Natural gas, showing signs it's ready to join uranium's rally. S&P 500, a multi-angle assessment you won't want to miss. Nasdaq staying on track with our forecast. Feature of the day, JPMorgan. Is the banking giant holding strong or showing cracks? Exciting update. Investing Angle subscription services are now open early. Secure your membership today to ensure uninterrupted access, with the full launch coming May 1st. Every video now features the join and super thanks buttons. Use them to support and stay ahead of the curve. If you find value in structured, forward-looking market analysis, smash the like button, subscribe, and share this with your trading crews and investing communities. Drop your favorite ticker in the comments. We're ready, and we read everyone. Let's dive into the charts, and as usual, we start with volatility. The volatility index. It was a very interesting closure today, the daily candle. And just 10 minutes before the close, the candle was at the position to form a bearish continuation candle. It was shaping below the low of yesterday. However, in the last 10-12 minutes, something happened and the price pulled back. Instead, the volatility index candle formed a bullish harami, and it technically is sitting right now on the 50 days moving average, which could give a very strong support tomorrow. So let's see how this new change and sudden change at the very end of the day works tomorrow. I personally am very concerned and very cautious about things like this happen. And speaking about the volatility futures, so the green candle today could be bullish, could be bearish. Again, it depends on the confirmation tomorrow. So far, this is the biggest concern, the daily closure. If we look at the weekly, and today we have a 5-day closure, so technically it's very similar to what the weekly is telling us. There were 3 candles which were not able to confirm a top for reversal for the index and for the futures. So far, this structure remains bullish until we can see a very strong move towards this level, 20.68, in the next 5 days. But I think that we might see something more significant on Wednesday or on Friday, much earlier. Speaking about Elliott Waves, this is the chart that we've been tracking since the middle of April. After volatility formed a corrective wave down, and so far I'm looking at as a potential flag and an ABC formation where wave C is forming a classical impulse ending with a potential diagonal. So far, let's see how it ends. If we see a strong reversal here, a very strong bullish candle on a daily frame or bigger, this would be the next potential targeted move. And the final chart that I'd like to share with you about volatility is the monthly closure. So far, in 2 days, it looks like it is shaping with a green candle, and this candle could be a big one, a big continuation for volatility to move higher. Obviously, it's not going to be a straight line, but the odds on the monthly frame will be bullish. If we look at the 2 months frame, it's even stronger at this moment. Let's see how it forms and what it does. I'd like to emphasize that this would be a special concern, which we will discuss in our next monthly report on the weekend. So the MACD on the 2 months frame for volatility index futures. So last time it happened in 2022. Before that it was in 2018. Well, right now there is a very good chance we can see something like this. Let's see how it ends. Still, if there is a very strong move down, volatility has a chance to revert this. But again, let's be patient for the next 2 days. Now let's have a look at the dollar index, what dollar is telling us. So far, what we are seeing on the daily frame, this is somewhat neutral combination. The current daily candle is bearish engulfing. However, considering the previous 2 big green candles, it's not ready for a reversal yet. And so far, technicals would better support a bullish move from here. The same thing is happening on the 2-day frame. Today's 2-day candle closure, and so far it is failing to move below the low of the previous candle, and obviously it is sitting within this body, within the range of the green candle. This is technically neutral bullish. Well, for the monthly frame, it's an interesting change. This would be, if it closes like this in 2 days, it will be a fairly strong bearish formation, most likely tower top. Unless dollar rallies about 3% in the next 2 days, which is still possible, but this move would save the bearish formation on the monthly frame. So there are quite a few possible moves here, and we need to wait for final print to see how it does. From the perspective of Elliott waves, no changes here. Dollar is still sitting in our target area. Ideal target area is between 98.3 and 96. It's been there already once, and let's see if it has a chance to make another move to this area where it can get a strong reversal. And speaking about the large frame, we discuss it regularly on the daily and weekly videos. So far, this is the perspective for a bullish flag here. Once this flag is complete, I would expect dollar rally to resume towards 113, 120 in the next couple of years. That's the long-term perspective. Now let's move on to the bond market and listen to what candles are saying about yields and TLT. So far today we have a very strong bearish closure. 2, 5, 10, 20 and 30-year yield. They closed with bearish candles. Most likely we will see another move down. At least it's in the cards and has much stronger probability. If we, however, look at the bigger frames, let's say for the 10-day, let's move to the next chart. So if we look at the bigger frames, so it's not everything is very clear. So the daily is bearish, obviously, and it freshly broke through the 200 days moving average. However, if we look at the weekly, it's far from being bearish. A very strong bullish engulfing, and after the move like this, a consolidation totally makes sense. 2, 3, even more candles can be formed to consolidate before moving higher. And at this point, the bullish stance hasn't been broken. So the 5-day and the weekly frames are bullish at this moment. And monthly is a very interesting too. So this formation, if it closes like this, we would have a deliberation pattern, and it's followed by an advanced block. No, pardon, not advanced block. The bearish version of it, it's a ladder bottom. So it's a ladder bottom, and if it closes with this doji, this would be a very strong potential bullish formation, looking for a move higher. And if you look at the even bigger frame, which we normally discuss with our subscribers in the written reports, so far everything looks bullish, and the very long terms are bullish either. Now let's have a look at the short-term chart for this is 20-year yield, the inverse counterpart of TOT. What we are seeing here is an impulsive move from the bottom and potentially a bearish, potentially a corrective wave ABC for wave 2. Once this wave completes, and there is a chance that this is forming a diagonal right now, an ending diagonal. Once it completes, we should be able to see a strong move upward. So far, this is the primary path. Now let's have a look at another concerning thing. So this is the spread 10-2 year treasury. What we are seeing, 5-day candle closed today, and it was a very strong inside down. If you remember, we were tracking 2-day bearish closure with a gravestone doji, then it was the weekly bearish candle, and now we have a 5-day candle, which also adds more concerns and elevates bearish odds. So far, this is the perspective, and no changes to the Elliott Wave chart that we've been discussing for a while. Now let's have a look at TOT. So TOT is technically very similar to the candles for the 20 and 10-year yield. Now, the daily is bullish. Obviously, it's inverse to the yield. Daily is bullish, and but this is it about bullishness. If we look at the 2-day frame, 2 candles were trying to cross above this red line, and this candle will be closing tomorrow. If it closes above the red line, we are good. So the momentum will be growing, the bullish momentum. However, if it fails again and pushes it below this red line, it will be a very strong bearish combination, most likely leading to a very sharp decline. Similar thing, this is the weekly frame. A very strong bearish candle, and now we have a third candle trying to establish a bottom, trying to reverse things here. However, there are many questions about it. The potential path that is needed is quite high, and the monthly, which is closing in just 2 days, so far it looks bearish. And the final for the bonds, this is our chart that we've been tracking for a while. Right now, TOT is in ideal target area for an ABC formation for wave 2. If it reverses here with a sharp wave down, consider that the wave 3 might be starting. However, I already discussed this. We might have another option. Wave A here has been corrective, and we might see a stronger and a bigger corrective wave, something like this, ABC, like a bigger flat for the corrective action. So this is also a possibility at this moment. However, I'd like to say that the purple path is more probable. Now let's move on to the next chapter of our discussion, commodities. And today we have an extended session. We'll start with gold, which has been a pressing point over the last couple of days. So what I'd like to say here, so the gold hasn't decided anything yet. The daily is bearish. There was a confirmation of the daily reversal. However, if we look at the 2-day frame, nothing changed so far. Now we have the second Harami candle, which is again bearish, but it also could be a rising 3 methods potentially forming. So the next candle could be instrumental, and we would see either a confirmation up or down. The same thing is not clear for the 3-day frame, and the weekly, after forming a potential tower top, is not decided yet. Now let's move on to the next chart. Oh, but before we move to the Elliott Wave chart, I'd like to remind you that we discussed this potential signal here. So this is daily MACD for gold, and right now this daily MACD and the cross would be of a record magnitude. Last time this happened, the previous record was in 1980s, and since then gold wasn't able to move that high, its MACD chart. And we discussed in details in our weekly report and in our weekly video the potential consequences of such a move. So if you're interested, you can watch it or review it. Now let's move on to the Elliott waves. So after the move today, we made a few adjustments for the potential red path. So the red path could be either wave 2 completed here, or alternative 2 might be here if this wave surpasses the beginning of wave 2. So far it could be 1, 2, or I think that I have better preference and better support for an A, B, C formation here for a bigger wave B. That's the potential primary path right now. Let's see how it closes in the next couple of days. So the monthly and the next weekly candle would be quite instrumental. I'd like to say that gold is a very slowly moving instrument, and we need to have a lot of patience to see one frame after another how they build and how they support each other. Speaking about GOD, we had a concerning rally here, and right now GOD technically closed one gap. However, the other 4 remained open, and with these candles on last 3 days, there is a potential island being formed. Let's see what kind of move it makes in the next day. If it drops here with a gap, well, that could be an island. And on the daily frame, the candles are a bit more concerning. We have a technically continuation of the odds, bearish engulfing on the 2-day frame, a consolidating candle, and the green one is still forming. It will be closing tomorrow. So if we have a strong green candle, potentially it could be a signal for a continuation for the move higher towards new all-time high. Now let's talk about silver. So silver is in an interesting position, particularly from the perspective of the weekly frame and the monthly frame. The weekly most likely formed an advanced block or or a similar formation, and this could be foundation for the following three methods if silver doesn't close above the red line this week. And on the monthly frame, in 2 days, it's closing in 2 days. So far the candle looks bearish, so it could be a very strong hanging man or a hammer. And if the price moves about 1.6 1.7% down below this line, it would be another strong combo, which is the dark cloud, and together with the hammer, the odds, the bearish odds, will be elevated. So, and it looks like at this point silver might not be able to provide a very strong rally in order to cancel this monthly candle. Speaking about this frame, I'd like to say Elliott Wave. Nothing changes here. So there are still three possible paths here, either the green one. The green one might be completed and we would be looking for a wave down towards this level approximately. However, this wave is way too, how to say, it's way too accurate, way too geometrically clean, and this is something concerning in there. So there is a possibility that this is just a bearish flag for either wave B or 2. So let's see what kind of wave silver produces and whether it was able to break through this purple line here to make a new lower low. And the final discussion is for the SOV. Technically, it is the same that the silver candles are forming from the perspective of the weekly frame and the perspective of the monthly frame. No difference. The only concerning here is that the daily candles are not entirely bullish, especially the last three ones. They were not able to advance above the big green candle. So from the candle's perspective, it is considered neutral bearish. Let's see what kind of candle it forms tomorrow and how SLV closes the month. Let's move to the next chapter of our discussion, and it's uranium. As I was expecting, uranium, remember our discussion, it was a very sharp closure here right on the opening, and this was viewed as a bullish continuation. So far, uranium formed the green candle and has very good chances to continue higher on other frames. The weekly is not decided yet, but I'd like to emphasize the monthly frame. So this is going to be a strong, very strong bullish engulfing, potentially starting a very significant rally, unless energy fuels bulls lose about 9.9-10% in the next 2 days, which is not very likely. However, anything can happen, but this is something to keep in mind. So if the green candle closes above the open of the previous candle in March, consider this is a bullish engulfing with very good chances for May to be bullish. And speaking about the Elliott Wave, no changes in our outlook. Potentially, this could be the end of wave 2, very small and sharp wave, and now wave 3 is about to start. Well, that's a quick update on uranium. Now let's talk about natural gas. We haven't been talking about it for a while, and today natural gas made a very impressive move. By the way, we discussed it in our weekly update with our subscribers, saying that not only natural gas but the other natural gas tracking instruments are showing the signs of a strong reversal, and it looks like it is happening. If we look at the daily frame, it's clearly a reversal, confirmation of the Harami. 2-day frame is a strong tower top. Maybe we'll see after that strong, we might see a couple of candles for consolidation, but in general the move is likely to go higher. And on the weekly frame, there is a potential for a bullish kicking candle. However, let's see how it closes. If it closes with a green candle like this, it will be a bullish kicking, very strong reversal combo. The most interesting thing is happening right now on the monthly frame, whether it's going to be saved from this bearish candle or not. We will discuss it in the monthly update once we see the clear print. And speaking about Elliott Wave, so this is the chart we've been tracking for the last week, and there were two probable paths at this moment. So I think that this could be the end of wave C of 2, assuming that the wave 1 was a leading diagonal. However, I think that some technicals also point to another possibility. This is something I'd like to discuss here. So this could be a potential wave. This could be a potential wave, a bigger leading diagonal for natural gas. So this would be wave 1, 2. This would be wave 3, and so this would be wave 4, and somewhere there would be wave 5, and this would be another possibility that and this only would be wave 1 of a larger impulse. So in this case, this would be a very significant move. And I'd like to show you this short-term chart here. This is something that we've been discussing. Potentially an A, B, C formation, and this wave C closing with an ending diagonal. If this is the case, then we should see a very sharp move here towards the origin level of the diagonal, about 20%, just a rough estimate. But I think that there is something bigger, even bigger brewing here, and I would need more time to evaluate it, and will post I will post it and an update later tonight on the website investingangles.com. All right, so now that's all for natural gas. Now let's talk about oil. Oil has been falling, and so far we've been very right about what is happening right now. So the two green candles were indeed consolidating ones, and now we have a strong bearish engulfing with a very good chance to continue lower. The same thing is happening on the weekly frame, and I think if we look at the other frames like 2-day, it's also a bearish, and the 3-day is shaping bearish too. Well, that's the perspective for oil. Unfortunate news, very unfortunate news, that oil wouldn't be able to recover from its bearish closure, potential bearish closure on April 30th. So I would say that rally of about 16-17% in 2 days is just plain impossible. The same, it is going to close the 2 months frame with a very bearish candle as well, bearish continuation candle. All technicals would support a continued move down. Now let's have a look at the chart. Elliott Wave that we've been discussing since the beginning of April, and the last update was about the ending diagonal on April 18th. So far, it looks like oil completed with a minimal target here at an ending diagonal, and now it's looking for wave 1, 2, and potentially wave 3 starting. So this is an immediate target 58.41, and the lower one would be 51.2, 47.5. However, this is not the limit of it, so the next targets would be depending on the wave. Now let's have a look at three big oil companies: ExxonMobil, Chevron, and ConocoPhillips. So I placed some numbers here, and these are numbers just approximate. I didn't use a lot of calculation for this one. So in order to reverse this candle, to make it less bearish on the monthly closure, Exxon needs a rally about 6%. Chevron would need a much taller order, it's about 17%. And ConocoPhillips would be facing a task about 10.6% rally in the last 2 days, which is very questionable, if not impossible. And I was also looking for the bigger candles, and found this interesting one for ConocoPhillips. If it doesn't recover strongly in the remaining 2 days, it looks like it is going to form a 3 black crowds on the 4 months frame, which is something extremely rare. And I wouldn't be surprised if it also makes a MACD bearish cross on this frame. So this is so much about the perspectives for Conoco. And if this is the case, I wouldn't be surprised if the price drops towards 66.45 range. Well, that's the perspective. That's a gloomy perspective, but it is what it is. That's what candles are telling us. And the final one I'd like to show you, this is the chart I've been tracking since March 2024, when Brent made this 1,000/500 DMA death cross. So this is a very big scale, and this is what happens right now. So far, after this cross, there was no significant recovery, and Brent continues to move down. The concerning part that recently these lines started to curl downward, and this is not a good sign. So even if we compare the previous occasion for occurrence of this cross in year 2020, we will see that after very short period of decline, it started curling up. But here we are seeing quite the opposite. So it tells me that this move is not yet complete. Something to keep in mind. Well, that's been all about commodities for today. And now let's move on to the stock market, and we start with the indices. So, and I'd like to start with index futures. First of all, what I'm seeing here is a very concerning closure for S&P 500, for Nasdaq, for Dow Jones, and for Russell, particularly for the first two. These are, from the candles perspective, are advanced block formations. One candle smaller than the previous one, and the upper shadows are growing higher and higher. So there is a very good chance that this is going to be a reversal, but we need to see a confirmation. So far, the technical support move lower. Similar condition for Dow Jones, but the combination is slightly different. You see this last Wednesday, big hammer, and the three candles technically formed within the upper shadow of this hammer. The same situation for the Russell. These are considered bearish formations. Let's see if we see a very strong move downward. If we look at the cash indices or ETFs, SPY, QQQ, DIA, and IWM, so far the daily looks neutral. This candle can be bullish, can be bearish, but we need to see a strong confirmation. I think from that perspective, futures are much more informational after today's closure. And as we are approaching the end of the month, it's time to have a look at what is needed in order to save the indexes from the bearish closure. S&P 500 needs about 5%, Nasdaq needs about 3.5%, Dow Jones about 7%, and IWM about 6.5%. They need to gain in the next 2 days in order to form bullish candles. Everything shorter than that would be considered bearish, however, with different odds. Now let's move on to the next one. We discuss it almost every day. These are the MACD crosses that are about to be recorded in 2 days. By the way, Nasdaq and the Russell, they already did this in March. So in April, it's time for S&P 500 and Dow Jones. And it looks like it's done deal unless the indices rally about 6-7% in the next couple of days. That's just another data point. And now let's move on to the Elliott Wave formations. This is the chart that we've been tracking since April 22nd. So far, we can see that the index minimally hit the target here. However, I'm still thinking it might get slightly higher. However, the minimum target is already hit, and we might see a strong move downward. Now let's move on to, this is an even smaller chart, just the last wave. So far, this wave, I started looking at it, and it's in a very interesting impulse, if it is an impulse. So this wave looks like it's the shortest wave in the sequence so far, and if I think that there is a possibility that this is an ending diagonal forming, and I'm talking about this potential count. So this would be 1, 2, 3, 4, and 5. If S&P makes a little higher here within this structure and then makes a sharp move down, it could be an ending diagonal. So far, this possibility is on the table, and it's not very strongly supported at this moment because of it's very difficult to make an assessment when we have two big gaps, and it's not very clear what kind of wave it is. Well, now let's have a look at the sectors. So sectors today closed with somewhat neutral candles, and the biggest concern is with the financial, because it's a harami, clear harami, and another harami cross for the technology. And the technology is about to form a 100 over 200 days moving average cross, which is likely to happen tomorrow. This is just to add to the bearish side of it. So the other ones, industrials, are somewhat neutral. Staples is also neutral bearish. Healthcare is positive at this point, it's more bullish, and consumer discretionary is neutral. And this one is very interesting. This is the energy one, and I'd like to say that this was an epic failure today. So the candle today failed to close above the high of this red candle just by 1 basis point. Well, it could be they could pay dearly about it for this. This is now a bearish combination, potentially a bearish reversal formation. Let's see, the next candle would be quite telling. And we already discussed about weekly and monthly closures for energy. They are not looking very good. Utilities is practically bullish, and the only two that are more or less bullish are healthcare and utilities. So other are either undecided or bearish. And let's have a look. The final look is at the large caps. When we have a look at this, my first thought here, oh, not all at the same time. So practically only Apple is somewhat bullish. Everyone else here is either bearish or neutral. Like Amazon, for example, very strong dark cloud cover. If it's not okay, where is open here? 62 and 70. Yeah, it's a dark cloud cover. We have a Harami, bearish Harami here. We have a hanging man and potentially hanging man for Meta and Microsoft. Google is falling down. This could potentially be a reversal, big reversal one. And Berkshire Hathaway also formed a bearish engulfing today. Tesla is neutral, but we need to see how it plays around this 200 days moving average. Well, so the large caps are more bearish than neutral. And the final discussion, and the next one, I'd like to talk about Nasdaq. Nasdaq, technically it follows the chart that we made last week. So far, I'm expecting it to hit the 20,000 as a minimum target. However, if it fails to do so, it will be considered as a truncation, the potential wave truncation, ABC truncated, and the wave might be shaping as an ending diagonal, which is not a very supportive combo. So we would, quite the contrary, we might see a very strong reversal and a sharp wave down. So that's a quick update on Nasdaq, and the final discussion of today is JPMorgan. So let's start with candles. So far, the move upward here, this is the weekly frame. The move upward wasn't very decisive, and the 3 candles were not able to negate the strong bearish continuation that happened 3 weeks ago. If we look at the smaller candles, we are seeing potentially a reversal here. So this is a small bearish engulfing to the previous candle, and all 3 of them are sitting within the upper shadow of the Wednesday's candle. So if we look at the monthly frame, it doesn't look bearish at the moment, but it's not bullish either. So it's more like a neutral one, and we would be looking for a confirmation. However, if we look at the bigger frames, so this is the chance for a strong bearish move, especially if this red candle closes below the low of the previous green one. This would be strong bearish engulfing. So the next 2 days would be extremely crucial for the JP. And this is the chart that we discussed previously. This is the MACD bearish cross on the 10-day frame, which happened in the middle of March. And since then, we were able to run some statistical analysis, some statistical estimates saying that the JPMorgan has a very good chance to fall about 45% and find its support between 160 and 100, depending on the structure and the size of the wave. And speaking about the long-term perspective, I think that JPMorgan is rallying in this blue, making a blue path. So 1, 2, 3, 4, 5, and this particular wave would be wave 4 of this bigger structure. However, if it breaks below 172.96, which would be required for hitting the target that we just discussed in the previous chart, well, in this case, the blue path will be invalidated, and we'll be looking for a green one as a potential super cycle for JPMorgan. And today is April 28th, so 13 means that we last time discussed this one. And if we look at the shorter time frame, something that we also left unchanged since April 13, it is forming right now potentially a bigger wave B for an even bigger correction. And this is for the blue path, this would be wave 4, as I discussed on the previous chart. So that's the perspective, and I'd like to say that this wave upward here has been clearly corrective. I'm not seeing a possibility for an impulse here at this moment. So that's the perspective for the JPMorgan. So the next probable move would be downward. Let's see how it closes the month and the week. So far, more chances bears have. And now let's wrap it up. The signals are shifting, and those who listen carefully to the candles and waves will stay steps ahead. Today's message: volatility's last-minute stance could redefine the next few weeks. The dollar and bond yields are nearing critical decisions. Gold and silver continue their technical journeys, and they have very good chances to move lower. Oil is sending warning signs, and energy giants aren't far behind. Uranium is flashing strength, and natural gas could be next. S&P 500 and Nasdaq remain aligned with our forecasts. JPMorgan, watch this one closely as the financial tide shifts. Early access to Investing Angle subscriptions is now open. Lock in your membership today ahead of the May 1st full launch. The more we grow together, the more value and affordability we'll share across the community. If today's insights helped sharpen your view, hit like, subscribe, share. Share it with your networks and leave a comment with your thoughts or tickers to watch. Stay sharp, stay objective, and remember, at Investing Angles, we chart the turn before the herd even blinks. See you tomorrow for the next wave.